Alright guys, this is test number 7 in the Opening Range Breakout series. In the first 6 videos, I tested the basic Opening Range Breakout strategy in different ways. I tested long only with 1R, I tested short only with 1R, I tested both directions with 1R, then I tested long only with 2R. I tested short only with 2R, and then I tested both directions with 2R. So far the best result was the both direction 2R test, but all of those tests use an immediate breakout entry. That means as soon as price broke above the opening range high, the strategy could enter long. As soon as price broke below the opening range low, the strategy could enter short. For this test, I want to change one thing. Instead of enter immediately on the breakout, I want to wait for the full 1 minute candle to close outside the opening range. So for a long trade, price has to close above the opening range high. For a short trade, price has to close below the opening range low. Then the trade enters on the next candle open. So this is not an immediate breakout entry anymore. This is a one candle close confirmation entry. Just to be clear, the EA is only using closed candles. It does not enter while the candle is still forming. For a long trade, one full 1 minute candle has to close above the opening range high. For a short trade, one full 1 minute candle has to close below the opening range low. After that candle closes, the EA enters on the next candle open. In MetaTrader 5, that means it enters on the first available tick of the next 1 minute candle, so the entry may not be exactly the candle open because of spread or slippage. The base strategy is still the same. Both longs and shorts are turned on. The opening range is still the first 15 minutes of the trading day from 9:30 to 9:45 Eastern Time. One trade per day. The stop loss goes on the opposite side of the opening range, and the take profit is 2R. The only thing I'm changing in this test is the entry confirmation. The question is simple. Does waiting for one candle to close outside the opening range improve the strategy, or does waiting for confirmation make the entry worse? One important note before I go through the report. For this test, I changed the starting balance to $10,000. I did this because it makes the account return easier to understand. The lot size is still fixed, so this is not an exact 2% risk per trade model, but the average losing trade in this test is about $182. On a $10,000 account, that is about 1.8% of the starting balance, so this is closer to a 2% risk size test, but it is not perfectly fixed at 2% every trade. The risk can still change because the opening range size changes every day. Now, let's look at the MetaTrader 5 report and see what happened. Alright, now we're looking at the actual MetaTrader 5 report for the one candle close confirmation test. Before looking at the results, I want to confirm the settings. The test is on the S&P 500 on the 1 minute chart. Long trades are turned on, short trades are turned on. The risk reward is set to 2 and the confirmation mode is set to 1. That means the strategy waits for one full 1 minute candle to close outside the opening range before entering. The starting balance for this test is $10,000. The test had 1,611 total trades. Out of those trades, 564 were winners and 1,047 were losers. That gives us a win rate of 35.01%. So the win rate is still low, but that is expected with the 2R target. With a 2R target, the strategy does not need to win 50% of the time. The winners are supposed to be bigger than the losers. Now let's look at the money side. The gross profit was $199,643.29. The gross loss was negative $198,749.65. So after subtracting the losses from the wins, the final net result was positive $8,893.64. That means the account went from $10,000 to $18,893.64. That's about an 88.94% total return over the full test period. Over about 6 years, that works out to roughly 11.2% per year compounded. The profit factor was 1.05. That means the strategy still made more than it lost, but the edge was small. The average winning trade was about $353.98. The average losing trade was about $182.19. So the average losing trade was about 1.8% of the starting account. The expected payoff was $5.52 per trade. That means on average, each trade made about $5.52. The report also shows 851 long trades and 760 short trades. The long trades won about 37.25% of the time. The short trades won about 32.5% of the time. So the long side was still stronger than the short side. The maximum losing streak was 12 losses in a row. The equity drawdown was about 59.8%. That drawdown is very high. So even though the test finished positive, this is not a clean result. Now looking at the balance graph, we can see that the account did finish higher overall. The account started at $10,000 and finished at $18,893.64. So the test made money overall, but this was not a smooth straight line. There were big drawdowns and rough periods. The strategy had a strong move higher later in the test, but it also gave some profit near the end. So my honest read is this. The one candle close confirmation did stay profitable, but it did not clearly improve the strategy. The profit factor dropped to 1.05. The expected payoff was $5.52 per trade, and the drawdown was still very high. So waiting for a one candle close did not make this a finished strategy. Now let's compare this to the previous test. In video 6, the both direction 2R test entered immediately on the breakout. That test had 1,628 trades, a 35.38% win rate, a net profit of $17,324.62, and a profit factor of 1.11. In this test, the one candle close confirmation version had 1611 trades, a 35.01% win rate, a net profit of $8,893.64, and a profit factor of 1.05. So the confirmation version still made money, but it made less money. The profit factor was lower, the expected payoff was lower, and the drawdown was still high. Also, remember that this test used a 10,000 starting balance, so the return percentage looks different from tests that use a different starting balance. That is why I care more about the strategy stats here. Total trades, win rate, profit factor, expected payoff, drawdown, and losing streak. Based on this test, waiting for a one candle close did not improve the strategy compared to the immediate breakout entry. So that wraps up test number 7. In this test, I kept the same both direction 2R opening range breakout strategy. The only thing I changed was the entry rule. Instead of entering immediately when price broke above the opening range, I waited for one full 1 minute candle to close outside the range. For longs, the candle had a close above the opening range high. For shorts, the candle had a close below the opening range low. Then this strategy entered on the next candle open. The test had 1,611 trades. It had 564 wins and 1,047 losses. The win rate was 35.01%, the starting balance was 10,000, and the final net result was positive $8,893.64. That means the account grew from 10,000 to $18,893.64. That's about an 88.94% total return over the full test period. Over about 6 years, that is roughly 11.2% per year compounded. The profit factor is 1.05. So the strategy still finished positive, but the edge was small. My honest conclusion is this. One candle close confirmation did not improve the strategy. It still made money, but it performed worse than the immediate breakout version from video 6. That does not mean confirmation is useless. It just means that one candle close confirmation was not enough to improve this version. That is why I keep testing one change at a time, one idea, one change at a time. Backtest the results, let the data decide. This video is only for testing and education. I'm not telling anyone to trade this strategy, just showing the rules, the report, and the results. That's it for this test. Now we keep building.